20th of October, 8:24 in the morning. Pre-market open, and as usual we're looking at November 2014 UK wheat chart, and we start with a monthly chart which we've got in front of us, and you can quite see here that we've got the green candle at last we're forming as we progress through September. Closed last night at 16.50. Just taking out a little swing high here back in 2010, come up to test it from the underside. See this at the top of this candle around here, 120, looks like it could be tested. Got the lower support line here, and we're taking out the high, coming to test the highs of back in 1996. As always, we're zoomed down now to see what's happening in the lower time frame. We've gone straight down into the daily time frame, and for the rest of the report, I'm going to concentrate on one indicator, which is always sometimes a bit dangerous, but I'm going to look at the 60-day moving average on all the charts, and we're going to draw our eyes to attention of the crossing of the 6-day moving average and see what important that event is. You can see here we had a cross up through the moving average in March, and that caused our rally which we saw during March, April, May. That broke here when we broke through the moving average in May. That crucial point there, we gapped down and we've fallen, £60 a tonne. Now we've come back and we're just about to test it on the close, not quite, but we will if the market holds today. We test the 6-day moving average. This is an important event. We have not seen it across from the underside for the last 9 months. We've got three actions here that we could obviously, the price could break through, come back and test, and then go up, continue on upwards. Well, that would be breaking the long down, the longwards downwards trend. 2 would be a come up to the underside here, fail, and then we go back down to test the lows again. Or third option here is that we just pop up through it and we then go sideways, as we were here in November and December of last year, because that's a sideways action where the moving average flattens out. But what it's showing us is that we've come back to mean value of the last 60 days, so last 3 months. The price now has come back, and we are at the value of that. So basically, if you were taking this as a sell signal here, you'd be looking to take profits. Now we're back in above if we cross above this 60-day moving average. So it's an important turning point, and it will give us a clue for the direction for the rest of the year and into next year. If we see a rejection, that's a bearish sign. We've got a downwards trend. We're looking then for the price to continue downwards. If we see a break up through it with volume picking up, then we come back and test it, and then we're up. That gets us excited to the upside. But obviously, if it flattens out and we have both happen and nothing happens and we're going sideways, then that sort of sets the scene for the rest of the year. We're in a sideways action, market, and that's what happened. So firstly, we'll look at this upside penetration, and we'll pop down to just have a look at a lower time frame here. This is sort of showing the last 2 months price action, and you can see here on a lower time frame we've had the original upward move of £10 a tonne. We've had this £5 a tonne move back, and we've held the 20-day moving average here to a T, and we held my pullback line here of 111. Last night we closed above the swing high here at number 1, and there is a possibility that we could see a good push up to hit this 120 if we break through this moving average here at 1765. So obviously last night's close was an indication that we've broken this high here we've broken it at the present moment. I'd like to see confirmation of it come down to hold, but obviously there is a chance that we could see a pop up here to the 120. So obviously that wants to be kept an eye on over the following week, and the following week is going to be an important week to set the scene as a recapping for the next 3 months. So obviously keep an eye on that on a closely daily action. And then we'll have a look at the US market. I've just put on here the 6-day moving average. You can see how important it is on the American market. You can see cross downwards, had this big fall, cross up, big up, rise, down. A failed test here, which is my option number 2 on the UK wheat market, and you can see here that we're heading up to test it now, the same as UK market. We've also got a buy signal on the MACD, which is interesting. at the same time. So that could be an interesting move on the US market. And then finally look at the Aussie rate market. And you can see the 60-day on here, and you can see why I was getting excited last week. We had a cross up. That was the option option 1 on the week chart, where we crossed up through it, came back and tested it, and now we're on a decision point of either we're going to hold the 60-day and then head up to my 370 target up here, or it's going to break and we're going to go back and test the lows. So obviously the rate market is the next stage on, which we're looking for on the week market. If the same pattern continues on the week market, obviously we should see a test of this 120. But obviously some interesting price action to come. It will give us a clue what's going to happen forward. So obviously keep an eye on it over the coming week, and I'll put an update this time next week. Thanks for watching.